Hey, what's going on, everybody? Obviously, we had a shorter week. Well, with Thanksgiving holiday, we didn't really even look at Thursday and Friday, so today will be a little quicker than usual, but we'll still run through it and kind of get ready for the upcoming week, kind of what we can expect. So first, we'll start on this hourly like we have, or actually maybe we can go to the daily. If we go to the daily, we'll see that we were still aiming just for daily swing points here, a daily high, and then ultimately we still like this daily swing point. So we've fallen short of this. We've cleared now the daily swing point here and this daily high. So we may once again kind of enter a little bit of consolidation. You still see that really we've continued to just print higher and higher prices. So after that institutional order flow, we hold all the volume imbalances here on a daily. Right? So we held this volume imbalance, held this one, expanded. And now we'll see if we want to just continue to kind of respect down close candles, right? And deliver higher. Or if we start breaking down structure, potentially coming into some discounts here. Still though, I kind of like the idea of higher prices. Right, so I kind of had this 1 hour that we were aiming at. On a 4 hour sense, I like this 4 hour fair value gap here. So as we have continued to press higher and higher, right, we've cleared short-term lows here, we've broken structure. We've now broken through highs, closing above them, closing above a 1 hour fair value gap. So we have an inversion 1 hour and a 4 hour bullish. You'll see how we repriced into it, holding with the candle bodies, and now we've gotten back above. So to me, this 4 hour here, if we are bullish, we shouldn't really start breaking below this 4 hour fair value gap paired with this 1 hour. Let me see if I can put, so we have this 4 hour on another 4 hour sense. We do have this even smaller one. So notice as we leave this 4 hour, we're creating a new one, and we've hit that a few times. But this actual 4 hour here could still hold us. So as far as higher time frames, these are kind of the discounts. If we were going to trade into this, I'd want to see these hold us on a higher time frame. Still coming off this buy side, so we may get a retracement into these levels. We just need to see what we'll do with them the following week. 1 hour, kind of the same thing. All right, so this is the 4 hour fair value gap. On a 1 hour sense, the 1 hour fair value gap is here. So there's more targets that we're continuing to aim for. You see how these overlap. I kind of like when they overlap like that. As far as what we did is with delivery, right, on this hourly, we can start here on Monday. Boom. This was the day we were kind of expecting consolidation, because if you look the week prior, we had created this range high and low. We were consolidating within that. This was the buy side we were targeting. And we actually ended up on Monday trending and delivering into really our kind of weekly target. Right, so we had buy side first, and then we ultimately had the daily swing point. That's what Monday delivers into, right? So we hit that on Monday, give a deep retracement into Tuesday. Ultimately on Wednesday, we came up for the high of the week, which was another daily high. But Monday kind of created the biggest range of that week, right? So we expand on Monday, short in trading week, so price is in a hurry. That's why we see, right, really after getting back above this inversion. So we get underneath it, we break above it. Candle bodies get held by the low of it, and then we expand into all of those targets. New week opening gap as well. I'm going to move for now kind of all these higher time frame fair value gaps where we understand where we're at. The 1 hour and 4 hour overline. We'll pull them back up as we kind of create the outcast for the week. But if we want to look at price action in here quickly, we'll use this lower time frame. And honestly, we'll probably go straight to the 1 minute. So on the 15-minute sense, this is Sunday. Still just consolidating on Monday. Notice we're inside that hourly fair value gap, daily volume imbalance. So you're seeing how those higher time frames are holding us here on this lower time frame. Notice this white level here, new week opening gap. So really a new week opening gap also holding us down close candle. A lot of discounts in here that eventually expanded us higher. 15-minute sense, we hold in areas like this. So we kind of come into a quick wick, bodies don't get near it, trade higher, same thing happens. Most recent discount gets tapped once, twice, and then continued expansion into that target. Let's go like this. Nice. So we got Monday here on the 1 minute. Now, as we were following, we did have sell side here, potentially interested in seeing if we wanted to create a Judas swing at 930 to run this sell side. But you'll actually notice that we had already cleared a short-term low quickly. So sell side had been cleared here. We were interested to see if it would make another attempt here. Instead, we noticed that the lowest discount holds. So often, if we're going to hold a high or low, the lowest discount or premium should hold us. In this case, since we're aiming for a low, right, this lowest discount holds us, and this is right at 930. So we create a bearish volume imbalance, can't even get one tick underneath, and now we expand up and through all the premiums we had actually created as we headed lower. So now we understand that this low right here will be safe, right? The intended target for us was just short-term buy-side targets. So like we mentioned, we had buy-side resting here, but we also had just short-term targets in the form of this buy-side, right? Previous day high, and then this buy-side here. So if we pull these levels up, once we break back above 830 level, we're breaking back above a bearish fair value gap. We're doing it with a new fair value gap, breaking above daily volume imbalance and 1 minute volume imbalance. So you can really see the bullish delivery that was taking place here. We now leave that fair value gap, can't even return into this fair value gap. So we create that breakaway gap, right? Measuring gap as well that we used. Breakaway gap here, measuring gap, and eventually expand into that first high. That's this level here. That's kind of where we exited, right? We took the trade within here. But as we're heading up higher, we tap that high perfectly. We get through the high, leave a baby fair value gap, right? We consolidate around that high for a little bit, and then we expand up and through these pair of equal highs. So at this point, we also had a 2 minute fair value gap. We were kind of understanding that, okay, price here with a shortened trading week, if we're going to start reaching for an objective, it's going to be in a hurry to do so. We wanted to see this daily swing high here. That was really our main target. So for us, we were fine just using, right, the volume imbalance here, this inversion. So we get up and through a premium, up and through a bearish fair value gap, forming a new bullish, right, leaving a 2 minute fair value gap. So once again, we're negating premiums while leaving discounts. That's really what we like to see if we're expecting price to continue to deliver. If those new discounts are aligning with old premiums, that's just a good sign that there will be high probability to hold price. And so that volume imbalance holds us, 2 minute consequent encroachment holds us. We expand into first previous day high where we close, and then ultimately the highest high here. As we notice we're going higher, we're creating little 3 drives. 1, 2, 3. It makes sense if we're hitting this as a higher time frame objective that we will want to at least give some type of short-term retracement. Even if we want to continue bullish, we could expect to see, right, a shorter retracement to clear out short-term lows, return into a discount, and then expand. So when we see this 3 drives hitting a daily level like this, a weekly level, we're just waiting for some type of confirmation to go lower, right? That comes with the 3 drives YouTube model. And then we're leaving behind that premium in the form of this fair value gap that gets used to now target the origination of that 3 drives pattern, right? So we clear these equal lows. Let me move this. While forming the YouTube model, SMT at the highs, that's what that indicator is. We've got that short-term high cleared. We then break through the lows. Right, and for me, I was fine because I'm already looking for lower prices. I'm okay entering on this candle, even though we don't close below. If we want to confirm that we're going lower, well, we wait for the actual candle closure below the lows. That comes here. And then we still get the retracement into it. That perfect retracement into consequent encroachment, clearing equal highs. And then one quick motion to clear out sell side here and the equal lows that were resting here. You'll notice that we also return into that old buy side, hold perfectly, right? Not random there. So we're clearing sell side, returning into an old high. And then from there, we create that inversion we spoke of to where if we get back above this, we would expect continued higher prices. And then once again, negating that premium with the discount volume imbalance before we head higher. Negating premiums while leaving, oh, look at that, good question. Yeah, negating premiums while leaving discounts, right? So if we're expecting higher prices, we want to see premiums be basically broken, right? So premiums, fair value gaps, could be volume imbalances, order blocks, breaker, really any premium. We want to see price get up and through that so we can trust that price wants to continue higher, right? So like in here, when we see price start now breaking up and through, notice how we have a premium here in the form of this fair value gap with this volume imbalance, right? Same thing with this fair value gap here. If we see price breaking through premiums aggressively while forming new discounts along the way, and we're already have an understanding of where price wants to reach, these will just become higher probability because we're negating, right, basically order flow at that point. So as we form a new discount, we're completely negating the old, basically algorithmic points that price was using to deliver lower, which is a signal that we're going to start heading in our expected direction. Right, if that makes sense. So like same thing here, right? We have a premium here. If price was bearish, we would see really this premium hold us and continue to deliver us lower. Instead, if we were to break up and through this premium, so here, now especially doing it while forming a new volume imbalance, so forming a new discount, that's a good indication that we still have unfinished business higher and price is going to continue to trend in that given direction. So we just use it to kind of understand order flow, right? We want to see that if we're expecting price to continue in our direction. Kind of same thing here, right? We could even point it out one more time. So like this, as we're forming this premium, this bearish volume imbalance, and this bearish fair value gap, we hold it quickly. But if we want price to go higher, we would want to see price negate these. And we do that with first the fair value gap there, which we like. And that's perfectly doing it, right? Notice how they're perfectly the exact same levels. So that's not random. That's that indication that we're talking about. We want to see the bullish fair value gap overlapping the bearish perfectly. And then this 2 minute was overlapping the bearish volume imbalance. Right, so we have other levels. Notice how the consequent encroachment of the 2 minute is the volume imbalance. So when they align like this, that's just what we like to see. But ultimately, we get back above this 1 minute inversion. And we just continue now to trend higher. So attacking this high, as we mentioned, we had a trending day here on Monday. So really, we were just targeting buy side all day. Notice how the discounts hold us. So in here, all immediate rebalance. Once we get above the inversion, we use that. And notice we close above it here, this 1 minute. We then come back into it, use it as support. Gonna move this for now. This is that 15, we don't really need it. But we're holding new discounts. So once we break this, it becomes a discount inversion. Trade higher, notice we create a new discount here. We wick lower, but bodies hold it. Bodies tell a story. Give you the volume imbalance entry, breaking above the high. And now we just continue to print higher. We're also holding the fair value gap here, discount fair value gap. Trending higher, creating equal highs. And then in here, we actually spoke about this volume imbalance. This is a powerful one because usually we would expect to see like this. When we open, the wick should come back and touch the close. Well, here, notice we wick up, create a high, and never return into that. So when I see that, that sticks out to me. That's going to be a very sensitive area in price, especially at the time. Notice what time it happens, right at 11. And then notice what occurs after, right? So we wick lower into fair value gaps, but that volume imbalance holds the bodies perfectly. I mean, hard to argue that precision there, right? If we drag that out. So we're continuing to wick, heading into lunch. We've already kind of established we want to run higher. And we have the higher objectives up here that we're reaching for. So once again, that's that daily high. We've already cleared this high. So we've already cleared buy side. But the fact that we've now expanded up and through that buy side and are continuing to push is kind of what we were using to understand that we would want to expand. So as we head into lunch, we create some consolidation. And then we run that here with this low. So notice how we have these equal lows resting here. And we come down to clear those lows out. So we create that consolidation. We go down to manipulate it as we are in lunch. And now we break structure. So this is kind of that fractalized YouTube setup. Short-term low cleared. This is a swing high. We break structure there at the high. I have the 30-second chart. I don't know if we can go this far back. I would show you this on the 30-second because it's probably, let's see if we can't go that far back. Oh, we can. Okay. Beautiful. Nice. Had to capitalize on that trading view plan. Y'all feel me? Too good of a deal. So as we are, well, this is the 30-second now. We understand where we are. We've cleared that sell side, equal lows. This becomes buy side. Notice how we have another short-term low here. clear that short-term low, break through the high, bullish, creating the market structure shift. Notice how we have a fair value gap within that here. Bodies tell the story, holding consequent encroachment, wick to the low perfectly, closing back above, leaving a new fair value gap. Bodies once again tell the story, at this time wicking into consequent encroachment of the recently balanced fair value gap. And notice what we do here. We kind of create a fractalized setup within the fractalized YouTube setup. So once you really understand these, right, this is where it gets fun if you can start spotting these type of setups. But within this YouTube model here, right, we clear these equal lows. We do it twice. And this is what we mean when this stuff repeats just over and over. Short-term low cleared. This is a swing high that we break. Right, we close above it here on this candle. We then revisit the fair value gap left behind, while at the same time, well, guess what? We clear equal lows. Here, short-term low. We're breaking structure at this high. Bullish breaking structure. Leaving behind a fair value gap. Bullish. That's aligned, drag it to the left perfectly with a premium bearish fair value gap. So we see how this stuff is overlapping with one another, right? It's not random at all. I mean, this is perfect delivery in here. And now once we hold this final fair value gap, wicking into the low of this 1 minute here, we finally get that aggressive expansion and the reaccumulation in here. So we'll go back to that 1 minute. I do actually kind of wonder, let me see, because within here, I don't know if we can go down to like a 5 second or something like that. To really show the swing points if we could. Ah, 1 second. Can't get the one. Okay, we'll go back to the 1 minute. Y'all get the point though. I was trying to get real precise with it. But y'all see how, right, we have a nice plenty of setups in here. On the 1 minute once again though, if we were to just look at this 1 minute without anything else, we have the clear short-term low being cleared here. Breaking structure, leaving behind the 1 minute fair value gap. This is now also an order block. Like this. That level holds us nicely and we expand. We then create that institutional order flow entry drill. So if we barely tap into a fair value gap like this, and then we start moving away, that's a good indication that basically we are on sides, right? So if we're already looking for higher prices, we want these to become breakaway gaps. We barely tap into this. We like to see how the bodies don't even get close to it either though. They hover away from it. And now we continue to expand. This was that setup that we shared that afternoon, which was clean. So as we're continuing to expand, we're creating short-term lows. And now we have, boom, short-term low here being cleared, right? So sell side in the form of equal lows, but also this short-term low here, cleared. Breaking structure at this high, leaving a fair value gap. Same thing, we had the order block aligned with it, right? That's where our entry comes on. We could pair it with the fair value gap as well here, and one here. So we see how these areas are starting to align. Once again, like, let me go to the 30-second again. So on the 30-second, you see it here as well, right? The equal lows. We're clearing, breaking structure. Here's that swing high. We're breaking through that swing high, leaving behind fair value gap. Come into that fair value gap. Hold the higher one as well, though. And then we ultimately expand higher up into this here, which is that daily high. So that was our final target. We get up and into that daily high. And then from here, we got a slight retracement and actually got one more pretty aggressive expansion into the new week opening gap. So Monday, all one-sided. Right, so during power hour, go back to this 1 minute. Wanted to show you though quickly, after hitting that buy side, notice how we created that important volume imbalance again. So just like we saw in the morning, as we're getting into that buy side, we have that volume imbalance that was never repriced into. When we drag that out, once again, we see how these things repeat. We hit that buy side. We play around. Notice how the bodies actually hold the volume imbalance itself. So we hold that volume imbalance. We expand, getting above the high. Right, notice we do that using it as support into the new week opening gap. And then from here, kind of short-term consolidation. We still had that setup that we spoke about where we clear the short-term high. So we have SMT here. We're clearing the short-term high. we're then rejecting off a new week opening gap and breaking lower, creating a bearish fair value gap. This bearish fair value gap is aligned with an old bearish volume imbalance. And as we're breaking lower, we're also negating and creating, right, an inversion here and here. So now in this case, because we've already been so extended, we want to see lower prices. This is where we flip it, and you want to see discounts being broken with new premiums. So in this case, we have a discount here in the form of this fair value gap and here in this volume imbalance. And as we negate that and close underneath, we're creating a new bearish fair value gap. So that's just what we would like to see. These overlapping PD arrays. Ultimately, we come up into the volume imbalance and hold that with the wicks and the bodies, still using the actual bearish fair value gap as well though. And then we give just a retracement kind of back into this range. So we had been delivering higher and higher and higher all day, right? If we can kind of take the range from this little last push up to the high, pull out the midpoint, right? We get underneath that quickly, snap back up into it, and then to close out the day, we just consolidated around that level. So for us, Monday was really the most expansive day. Well, like we mentioned, we moved quite a bit. We reached into multiple targets in the form of daily highs, right? Ultimately another daily high here. And then heading into Tuesday, we wanted to see if price would kind of just consolidate here or even give us a short-term retracement. So now on Tuesday, you'll see that really coming off of the midnight level, we really continue to deliver one-sided. So even in London, right, we get above midnight quickly and then we just continue to deliver bearishly. This here is a, let's say, I want to say 15-minute, just to be sure we get it right. 15, I lied. Oh wait, that's the 5. Yep, okay. So right, we had that 15 that we were looking at. We're thinking, okay, all right, we have a lot now after this huge run up, we have a lot of unfilled inefficiencies in here. So if I was to clear up this, we would kind of see this as the buy side of the curve. On the way up, we've created swing lows and a lot of discounts that have yet to be touched. So even if we wanted to continue higher, we would understand a slight retracement into some of these unfilled inefficiencies. Right, so that can come here, here, this swing low. Right, ultimately here was kind of the last one we saw as well. But for us to understand, if we're going to start breaking underneath discounts like this, right, we would expect that they would offer us resistance. So once again, as we break through the discount, right, we close underneath it the first time. Notice how we leave a bearish fair value gap. So negating the discount with the premium. After this huge run up, we can expect a retracement. This holds us. We then break again underneath this fair value gap here, creating a new bearish fair value gap as well. And at this point, we just wick off that 15-minute, break lower into that retracement, into this 1-minute fair value gap. And as we get to the 1 minute, we'll see that. So we'll go to the 1 minute now. So we had that 15 that we were speaking of, kind of that rollover period before New York. And then during New York, we have this once again, hideous price action. We have a lot of 1 hour volume imbalances in here. I'm not going to pull them up now just so we don't clutter the chart. But if we remember, and if we watch the stream over again, we had a lot of like 1 hour fair value gaps and volume imbalances in this area. And that's why price spent so much time just kind of consolidating here back and forth. Ultimately, we were able to break underneath all of this. So when we see price spend a lot of time going up and down, if we can leave that aggressively and close underneath, we should see that kind of as a BPR, right? A balanced price range. So we notice that we've painted up, down, up, down, up, down, up, down. We've broken lower, and we're leaving now a fair value gap. So if we're expecting some type of retracement, right, price has already hit kind of a daily objective, a retracement can be expected. We had a 1 minute fair value gap here that we were aiming at, which is what we used to go long or call out the longs the previous day on Monday, right? So this was an important level for us. We had equal lows as well. So as we break underneath this low, leaving behind that fair value gap, we can kind of expect that this fair value gap here would want to be the target. So as we trade into this fair value gap, we then break structure again using up close candles now as resistance. Right, so we're able to now follow price, follow order flow, up close candles, resist price, deliver us lower into now that 1 minute fair value gap. We were able to now kind of really see, right? We had left a bearish fair value gap here. We wick into that fair value gap. And now in the same way, if we wanted to continue bearish after wicking into this fair value gap, we should have continued lower to run out these equal lows. Instead, we create that failure swing. And now we overtake, right, the high and the fair value gap while leaving behind a fair value gap here, a 1 minute. So we end up leaving behind this 1 minute fair value gap. We also create now an inversion fair value gap because as we're closing above this here, right, notice how we come into it once, twice, holding consequent encroachment before delivering into a short-term high. So now this is buy side. In the short term, right, it's also an inefficiency. We return into that. After hitting that buy side, we then come out to run the lows created, but you'll still notice that this kind of original setup holds us. Right, so at this point, we're kind of consolidating, but the long side of the market is still prevailing. So we're holding this untouched discount. Only after hitting that buy side did we deliver back into it. And as we're doing this, you'll notice how we have cleared a short-term low. So we clear a short-term low heading into a discount. We then create that bullish volume imbalance. That bullish volume imbalance holds us. Once again, notice that last premium. So as we are going lower into the sell side, as we break above this premium, it should now hold us. So we get above it here. Right, notice how once we get above it, candle bodies continue to respect that level. And then ultimately we get that expansion higher. So we clear out the highs that were left in the morning. And then we actually ran, did we run this high? So we left this pair of highs here. Yeah, so I was like, we left this buy side for the time being. All right, we'll leave that there. But now for us, we were kind of just really targeting this high. So the one we shared, right, we'd like these equal highs, low hanging fruit. So now as we create this little setup, right, where we bounce from the premium into the discount, notice how we create the equal lows. We clear the short-term lows, holding at the untouched inefficiency, breaking structure, and now continuing to deliver into buy side. Once again, once we kind of get into this high, we create a false high here. So at this point, we have now engineered buy side. Right, so we've engineered a new buy side target. We give a deep retracement into just untapped inefficiencies, volume imbalance. And now as we really head into power hour, and this whole afternoon, just chop, right? So back and forth, nothing in here that we really would want to pay too much attention to, besides how liquidity is being interacted with. So we create the buy side. We create 1, 2 relative equal highs underneath that buy side, run out some short-term sell side, and then we clear that buy side. I actually did want to mention, right, you have one little quick opportunity. So if you notice how after we clear this buy side, we still have now sell side here left intact. Here. And what we do, right, we kind of take the opposing range. So if this is the buy side high, well, the high to low of this range, this would be that opposing liquidity, sell side here. So now after clearing buy side, it would make sense to see price kind of want to wander back towards this sell side, especially because we now have other lows resting here. Quickly, really that last 10 minutes of power hour. So after 350, you get a quick YouTube setup that takes place where we clear a short-term high. We then break structure at this low, leaving behind a fair value gap. I'll make it a little bigger to see. Leaving that fair value gap. Fair value gap holds, we break lower, leaving a new fair value gap. And as we break lower here, notice we're breaking underneath an old discount. So we're breaking the discount, forming the new premium, fair value gap, wick into that, ultimately deliver into that sell side. And then if you look at these wicks here, notice how this wick, right? So this was that original set of equal lows that we had mentioned. Well, we left it intact here that morning. And now during power hour, that's actually what we come to clear. So we clear the sell side from the morning, wicking those equal lows perfectly, and then ultimately kind of reverting back into this range. So notice, however, though, we failed to clear this actual buy side here on this run up. So now, since we have cleared sell side, we still kind of want to see higher prices. If we're going to have buy side resting here underneath this buy side, it made sense that that would kind of be the next area that price would want to deliver to. So now on Wednesday, we were kind of looking for that. We ended up delivering up and through that aggressively. Right, so we get up and through it the first time here in London, ultimately continuing to deliver higher heading into New York. And now here in New York, boom. We had high impact news at 10, so we weren't even really looking until where about, I want to say about here really, as price had already delivered lower. But you'll see that Wednesday was really reaching for now. This was the daily high. So Monday hits a daily swing point. Wednesday, we get into a daily high. And now when we see this, right, we've hit that daily high. As we're creating this daily high, we're forming a YouTube model. So here and here, which on this, I actually do want to see. Right, on a smaller time frame, just so it's a little clearer, right? Boom. So like this is a 30-second. We could even go to like a 15. You really see how these things play out. Yeah, it's the same thing as well, right? So even on a 15-second here, where we can really see the swing highs. We create swing highs, we then clear this. So we clear short-term equal highs. We break structure at this low. And once again, the importance of, notice how this low was formed inside of a discount fair value gap. So this fair value gap holds us into buy side. So now if we can overtake this, we would expect price to continue lower. We overtake it, breaking through a low, leaving now bearish fair value gap. So textbook YouTube model, textbook breaker, textbook inversion. So when we see all the concepts aligning like this, that's really those high probability setups. You see price trades into it quickly and then breaks away hard and aggressively through these lows. At this point, we weren't even really involved, right? So we're not involved in any of this. We're simply looking at price. We see how that holds us. We aggressively reach into and through this low. So now at this point, we were thinking, okay, we have cleared another daily high. We're retracing into the range. We want to see if lows can continue to be interacted with. So for us, our target now became lows. I'm going to move this for now. So as we head back into Wednesday, right, our target became lows. So we had lows here. This was our sell side pull that we were aiming for. As we break through this low now, right, we've created one large breaker. So this whole thing now is one gigantic breaker. And what we were doing, we were going from this high to this low to this highest high. And now we break that aggressively here. So as we look at this whole thing, right, these down close candles become our breaker here. The lowest consecutive down close candles. We drag that out. We notice how there's a bearish fair value gap overlapping the bearish breaker with sell side objectives still intact. So now when we see this, remember there was also an 830 level here. It's not showing for some reason now, but the 830 opening is also right aligned with this fair value gap. So now we have plenty of premiums that should hold us if we are going to deliver into sell side. And that's why we were comfortable shorting this fair value gap. So we shared that, right? We go short here. At this point, we're not expecting any of these to be retraded into because price completely negates all of these discounts. So as we completely slice right through all these discounts, right, really the only, or we'll say the most recently formed premium, which is this breaker, is what we were looking at. So we have established the breaker and that fair value gap aligned with it. It makes sense that price would reach into that area, holds there, delivers into that sell side. Gives you one more quick little stab into that. So clearing that short-term low before breaking back up into now really that untouched range. So only after delivering into sell side do we retrace into these higher inefficiencies. And now on the way up, we were able to take advantage because if we notice, right, we're breaking through the most recently formed premium. So this fair value gap, we're breaking through it while forming new discounts. So as we've said plenty today, that's what we like to see in price, right? We create that discount and this one actually returning into the lowest. So we wick into the lowest one. Our entry came on the actual volume imbalance itself. Bodies hold the volume imbalance. Then we deliver into that new week opening gap level here. So we were fine with that. We do stag up a little bit higher into the actual fair value gap. Once we do that, we then give a retracement to run out the short-term low created here. So short-term retracement to clear out liquidity. All right, we clear out that sell side. We return back into this fair value gap. And now really kind of create the same thing we saw here. To where as we return into the sell side, we have created a bearish fair value gap. So now as we watch price, if we're going to overtake that fair value gap, we would expect to get some type of run higher. Right, so we overtake it first here, retrace into the low, hold the low of it, leave it one more time, creating a new discount. Consequent encroachment holds us beautifully, breaking higher, new fair value gap now formed, holds us, and now we attack the buy side that we created here. So we get equal highs, and now I think we left that high intact. Yeah, simply returning actually into that inefficiency. So we leave this high intact. But for the time being, we returned into the actual 1 minute fair value gap here. So we hit this 1 minute fair value gap. Right, this actually ended up being high of the week. So we leave that high of the week in place. We hit this premium, break structure. Notice how at this point, kind of like we've been seeing when we break lower, we want to see if that fair value gap holds or gets broken. And whereas here, this fair value gap got broken, and here, this fair value gap gets broken, notice how this one holds us. So now we hold this one, we leave it finally, kind of confirming that idea of running lower. And we've left lows behind here. So notice on the way up, we've created equal lows. You can see how the market's always going really from buy side to sell side to buy side to sell side. So it's always moving in these market cycles. And then ultimately, we clear out that sell side. And once again, like I said, right on the way up, lows, lows, lows created. Well, as we attack those lows, we're going to create highs. So high, high, high created. Right, so now we have opposing buy side that we can attack on the way back up. Ultimately, we leave this high in place. We left the equal highs as well. So in this case, we weren't able to get the equal highs. Right, if you notice, we leave equal highs, only running this high really as the buy side. But at this point, we're heading into really the last day of the trading week for many people. Thanksgiving following. Boop. So as we create these equal highs, we break aggressively lower to now clear out sell side. And notice how we left this low intact. So we're leaving this low and this high intact, not really running external range, but running all the internal range, right? So like this low here gets cleared, this low here gets cleared on this run lower, but we actually leave this swing low here in place. So if I was to drag out this low, because now we have relative equal lows here. So this becomes important as of now. Because for Wednesday, that was really all that we had. So Wednesday ends up creating this relative equal low. We retrace back up into the new week opening gap. And then as we head into power hour, really just fizzle out. So once again, a little shorter week. Most of the action came Monday, Tuesday with a slight retracement, and then Wednesday hitting the actual high of the week. And then Thursday and Friday just consolidated as we would expect. I wanted to wait until later to do this so we can actually look at market open. So I wanted to see where that new week opening gap was at. And rather small new week opening gap here actually. So we'll still kind of use it. We'll see what it plays out. New week opening gap next to another set of new week opening gaps. If we can't move away from these, that's an indication that we may start consolidating again. So honestly, I would like to see price kind of move away from the new week opening gap. Either higher or lower, doesn't matter. But I don't want us to start kind of gravitating around all these levels. Let me see on a higher time frame. Let me clear this quick. So clear all this and this and this. We like these relative equal lows. Notice how these lows are paired with an inefficiency, not random, right? The only inefficiency. So that's why I kind of like that there. Obviously buy side here, such a shallow run. So just kind of labeling out the liquidity for the week. Buy side, sell side. If we can, let's see what the 4 hours messing with. 4 hour daily. Daily volume balance. Hold new week opening gap. 1 hour since, high, low, higher, high, broken. So if we're being honest, holding the rejection block. Right, rejection block here, we're holding. Relative equal highs get cleared. Breaking structure at the low. First close underneath there. New week opening gap can act as the premium. Order block, breaker though. I like the lowest down close candle, which is actually this one. Holding that. So far, honestly, if I'm looking at this, more bearish. More bearish. Right, not crazy bearish, but I do like the idea of this here. 15 is cleared. So yeah, look at, right, coming off of that area, 15 is cleared, equal highs here. This is that breaker. We're going to remove that. Midnight and 8:30 near one another. Discount fair value gap overtaken with a bearish. So for me, actually, I would want to see if this would hold us. I know it's only Sunday, but if we wander lower and then tomorrow this still stays open, maybe potentially seeing if that could hold us into, right, this low. I like this low exactly. We have this low here, but then consequent encroachment of that 1 hour fair value gap. Notice how that low is perfectly on that. So that would be another level. Yeah, I like that. I like it. I like it. 1 hour. Yeah, let's see if that area here can hold us. Okay. Yeah, I guess we have our... For Monday, I would look to see if we can't go lower. That would be me. At least in here, in the short term. It's a 4 hour fair value gap as well. I want to know if we hit the 4 hour consequent encroachment. Ooh, barely. Okay. So notice how we've hit that 4 hours fair value gap consequent encroachment to the tick, which means we actually could give one more stab into that and still hold. So yeah, I like that. I like that. I like that area here. I'd look for this inefficiency. That's what I'd like to see. Yeah, that'll be all for today. If we don't have any questions or anything, stick around quick and make sure. And Q kind of pointing towards the lower prices as well, which would be nice. That would help ES. Short-term high cleared. I'm looking at this from this whole leg. That's 1. That's 2. That's 3 up there. Come down for at least 1. I think you can get underneath the 4 hour fair value gap, consequent encroachment, close underneath it. Pair that with a 1 hour here. Yeah, if we can get underneath that, hold that as resistance, attack this low and NQ. Should be able to send ES into this inefficiency here. So yeah, I like the idea of that. Lower prices all around the board. High impact news at 8 or 10. Okay, yeah, so we'll be back actually at 9:55 Eastern tomorrow. We have high impact news at 10 o'clock. So we won't be back for equities open. We'll kind of let that first 25 minutes play out, and then we'll get on just before the high impact news event. So with that, if that is all, enjoy the rest of your day, everybody. Hope you guys had a good Thanksgiving. Hope you enjoyed your weekend, had some good time off. But yeah, we'll get back to it tomorrow morning. So until then, have a good night, and we will talk tomorrow. See you guys.